All right, guys. So today, Nvidia is all the way back up. I don't know if it has some good news or what, but today we got Goolsby, Daly, Cook, and Bowman speaking ahead of PCE on Friday. It'll be a relevant release. We'll see what they say. Yeah, we got Canadian CPI as well. We got a bunch of stuff, really. But today's kind of slow. Thursday and Friday this week are the busy weeks. Yeah, so we got Goolsby, Daly, Cook, Bowman. What's up, David? Yeah, Canadian CPI. Let me see what they're expecting, though. All right, let me get some music on, too. Hold on. I need a haircut, bro. I'm getting one today. I need it. It's time. I see Nvidia come back to be a little fake out. There's a really big gap right below the 110 mark that, in my opinion, should get closed, but it's just a small humble analysis. Hey, maybe you're right. I mean, what I'm talking about is, you know, so we dropped a lot yesterday in Nvidia. So, like, look at this big dip yesterday. You know, we dipped from, like, 123s all the way down to 118s at one point. Lower than that in pre-market this morning. We got all the way down to 115s, and so this morning we bounced all the way back to almost 122s. So this is the rebound I'm referencing here. Again, we just bounced back a lot. Now we're still down for sure. It's not like we're not down. Like, we're still down for sure, but we're down less than we were, if that makes sense. When you get to my age, there'll be no hair to cut. Honestly, brother, I'm just glad to have hair, to be honest. You know, a lot of my friends don't, and that's okay. I'm not judging. I get it. Like, listen, bald's beautiful. I'm not mad at bald. You know, I'm just glad to have hair personally. So that's how I feel. I'm just glad to have hair. You know, they say balding comes from your mom's dad. My mom's dad was bald at like 25, you know. So again, I'm very happy to just have hair. My dad, on the other hand, I have my dad's hair. Somehow, you know, they say it comes from your mother's father, but that's not true. Because I got my dad's hair without question. It's my dad's hair. My dad has long curly, or my dad has dark curly hair. You know, if you look at my dad here, look, I have a picture of him. I have his hair for sure. So, like, look. Yeah, so my dad has the same hair as me. It looks different now because my dad is like me. So when I was young, I had, like, blonde hair, believe it or not. By this point, I must have been, like, 11 here or something. My hair had changed. But when I was first born, I had blondish hair. So this is, like, right in the middle. If you look at me earlier, let me see if I can find more. My hair was, like... My hair was light. Like, I had blonde hair when I was born, and then it slowly changed out of blonde to whatever, to like brown now, dark brown. Yeah, like, look, here's me. So my hair went from being super light to like pretty dark by the time I was like 11, you know. But point is, I got my dad's hair, same hair. I look a lot like him too, but yeah. Point is, he's got curly hair exactly like I do. His is a little bit more wavy, but it's the same type of hair. It's thick. Every time I get my hair cut, they're like, dude, you got thick hair. I'm just glad to have hair, personally, you know. Yeah, apparently now there's, like, medications that can stop you from losing your hair. But they have all these bad side effects that I'm not trying to deal with. you know, I'd probably just let it go if it started, because some of those like if you ever look at propecia side effects, they do not look like fun at all. Like they'll mess with your prostate, they'll mess with like all kind of stuff, man. They'll cause you to have gynecomastia, like all kind of crazy side effects that I'm just not. I don't think the swap is worth it personally. Yeah, for sure. I definitely look like my dad. Honestly, it's ironic. When I was growing up, everybody said I looked like my mom, like my mother. Jack looks like my mom. Like my son looks like my mom. My mom is where I get the blonde from, but all right, guys. So yeah, Nvidia down to 121.03s. You know what's really interesting is like I streamed yesterday. Oh, never mind. Yeah, I'm definitely my dad's kid. Anyways, GameStop, guys. GameStop ripped up to 25s. It's starting to quiet down a little bit. Nvidia all the way back up to 121s. You can see the NASDAQ here. We've had a large dip on the NASDAQ. Now, it's not a large enough dip for me to want to buy it. I'm not really trying to buy anything up here. Dang, dude, Nike. Hold on, wait. Nike, why does it have such a good average here for Nike? I don't get it. When I sold Nike yesterday, it did something to my average. It says I'm up $100+ on this trade. Oh, I'll take it. I already took some profit there as well. Any reason SEDG is falling? Solar. So I'm assuming it's a solar company. Yeah, I'm not sure. Not really my niche of stocks that I look at. Target for Nvidia. You know, it's hard to tell. I've said this before, I'll say it again. Nvidia is up so much over the last like year plus. You know, Nvidia is up like 160% on the year, which is just a crazy amount. Anytime anything's up that much, I'm a little bit skeptical on a continued run for it. I'm in Nvidia right now, but this is essentially what the chart looks like. And again, I don't know. I don't know what we should get here. I can only speculate, and it's just up a lot. And so, you know, you got to question. All right, things I've said about Nvidia before are like, okay, I think the biggest catalyst towards a market crash, like you get some people being like, we're gonna crash or whatever, and honestly, they say it too much. It gets to a point where it's just kind of overbearing. Because again, the big problem I have, and again, I'm not even saying they're wrong, but the big problem that I have is that nobody knows. And so the people who act like they know the most for sure, like definitive things, typically know the least and are the most emotional, right? Like that's a very common conclusion I come to. Like anybody really forcing anything on me like that, it's one thing to say, hey, I think this is going to happen, but maybe I'm wrong. It's another thing to say, hey, this is going to happen, and if you don't agree with me, you're stupid or whatever. You know, those are two completely different things. And, you know, the first person is more reasonable because anybody that's experienced the market knows that it's all kind of probabilities. Nobody knows exactly what's going to happen. So with that said, you know, I think the biggest probability of a crash is from Nvidia correcting. Now, I think the Nvidia correction would be much bigger than this if it's going to start a market crash. I think if Nvidia goes something like this, you know, I think that will trigger a potentially big correction in the stock market, the Q, the NASDAQ, the S&P, the Dow. I think that'll correct them very large, and the rest of the markets will follow it, and that's when we might get a big correction, pullback, or whatever it is, and that's when I might probably start buying stuff up as well. But yeah, that's a big if, and it doesn't mean it's going to happen. You know, AI in the sector, I really do believe is that next big technology. And so I guess the only thing that we can really look at here, and the question we have to ask ourselves innately, in my opinion, is have we changed from 2000? Like, have we changed from 2000, or is greed still running things? Because if greed is still running things, you know, it's very possible we do get a correction eventually. But because again, and I'll reference 2000, like 2000, you know, the internet was that next big thing. It's not like the internet was gimmicky. The internet was real. The internet took off and grew to very large, crazy big levels where, you know, the internet now is so widely used and so powerful of a technology that has grown everything in the world for the most part. It's changed how we interact with each other. It's changed everything. But post 2000, we still got one of the largest bear markets in history from that, right? And so, you know, it kind of parallels now where have we learned anything from that? Have we learned how to get through these type of tech runs without causing massive bull or massive bear markets afterwards? And that's the question. And I don't know. I hope we have, and I hope Nvidia can hold and continue its run, and really it just needs to stabilize, if you're asking me, right? If everything else is following it tech-wise and it's dragging the market up to unreasonable levels, the most healthy thing at this point in time, in my opinion, would be for it to go sideways for an indefinite period of time. Now, I don't know if it's going to do that. I know, you know, this is the biggest correction we've had really over the last year for Nvidia. And so, I you know, I think there's a lot of ifs, but let me know what you guys think in chat. I'm not sure, you know. A broken clock is right twice per day. Yeah, for sure. Meaning people who predict crashes, eventually we're going to hit one, right? But it doesn't mean they're right. I've given this example before. A lot of these guys have been saying we were going to crash since here. A lot of these guys have been saying we were going to crash since back here. And so say if we crash now and we drop to here, are they right? No, they're not right, because they said we were going to crash back here and we're still over that, you know. So I don't know. I think but I do understand, like, I do understand things being extended. I think the root bias of people like that is really that they missed out on this run, right? Like, if you didn't take advantage of Nvidia and tech and the crazy runs, you know, the 24% the S&P 500 gave us last year, the crazy percentages it's given us this year, the crazy amount of strength and gains that the tech sector overall, the Magnificent Seven stocks have done over the last, you know, year plus, it might be kind of comforting to think that we might give it all back and that you didn't really miss out on anything. And I think that's what drives a lot of this bias. Like, oh, we're extended, because they're not really taking advantage of it. But again, I do agree we're up a lot. It's hard for me to just with my own specific type of like trading strategy. It's very hard to get me on board with buying up a lot of stuff right now. It looks a little bit better now that Nvidia dipped, but the SPY didn't really dip that much. Like the SPY, the NASDAQ, the QQQ, they're not really down that much. And usually when I buy up stuff, I would like a larger pullback. I don't necessarily need it if I'm dollar cost averaging in or anything like that, but I would like a larger pullback if I could get one. So yeah. Nvidia has great fundamentals. Sure, it does. Again, I think AI is that next big technology. You know, and so I think AI is that next big technology. I think it's obviously incredibly useful as a tech. It's going to build a lot of technologies over the next decade plus, and it's going to grow and evolve and get better and better. And I think that's a powerful thing because it's already crazy good now. But you know, the internet was that big technology 20 years ago, 25 years ago. And so, you know, I hope it doesn't happen. And again, I'm in a portfolio now where I'm going to be fine regardless. Like, my portfolio now is not, you know, I'm in about $60,000 in positions currently, but you know, 60, really $55 to $60,000 of my portfolio is in treasury bills, which should do well if the market turns and the volatility spikes. My T-bills will go up. You know, I'll make money on those. And so I'm hedged, but yeah, we'll see. Yeah, I see SEDG, which is, somebody had me look at this one, which is solar. Yeah, I'm not really a big solar guy. I never have been a big investor into solar. I don't really trust it. I think technology moves too quickly to make any one technology like that incredibly easy to bet on, if that makes sense, right? What I mean is, like, technology evolves so fast. You know, we get, like... I'm just going to use this example, but it's not the most realistic example because these are more stable markets that I'm about to bring up. But it's kind of like, you know, we have the CD, and then we've got the DVD player, and then we've got streaming, and then we've got all these different things, right, and that are evolving. MP3 players, and now it's all on our phone and stuff like that. Like, technology evolves quickly, and I think that's bad for solar energy. I think if you look at the long-term trend of solar edge, it's a terrible trend. It was at almost $300 in August of last year. It's at $33. It's been downtrending for a year plus. So, I mean, if you're trying to invest in that, you know, I think that's a risky bet. But high risk, high reward, maybe. I'm not sure. That move is wild. It's a robbery. Yeah, but people should see the trend, though. You know? Like, okay, like, let's pull this up. So here's SEDG. Okay, look at the long-term trend. Like, it did all right here. You know, back here from 2020 to 2023, it did okay. It's been downtrending really since mid-2023. You know? Like, that's not the stock you buy. You buy a stock that has a long-term trend that looks like this. Like, if you want to know the stocks I target, it's not stocks that have a long-term trend like this where they've been downtrending for years. That's not the stock you buy. You buy the stock that has an upward trend like this, like on a weekly chart, but maybe like a shorter-term chart looks like this, right? Like, that's the stocks you buy, because these are the ones where you get in here, they're more likely to go like this and continue that positive strength. That's positive long-term strength. You don't buy the stocks that look like this. You know, that's not the stock you buy, personally. Again, in my opinion. Again, I'm not an investment professional. Don't copy me. But yeah. Right, exactly. Spending 15 to 30 grand on solar to get potentially outdated and obsolete with technology within a few years is a risky endeavor that I'm not getting involved with. You know, that's why people always say, oh, well, you know, finance your solar panels and we'll put them on the roof and they'll make your home more valuable. Maybe they do, you know, or maybe people look at them like freaking satellite dishes within the next 5 or 10 years, and everybody sees this huge chunk of hardware strapped to your roof that's now obsolete from technology growth. I think that's the more plausible situation, and that's why I haven't put them on my roof, because technology grows quickly, and when you understand that, betting long-term on one specific technology is a risky bet, you know, and that's what a lot of people in the solar industry don't understand and don't see, is that even if solar is that next big technology, the real issue is that within a couple years, we're going to have a better solar panel that's going to do better than the current solar panels on your roof. And so your roof is going to be outdated within a few years, most likely, if the technology continues to grow, which it probably will. You know, and if it doesn't, the technology's dying anyway. And so either way you look at it, it's a risky bet. But again, I think a lot of it has to do with sales. I think people are going door to door, like wholesaling solar and then they're going door to door with salesmen selling solar to consumers, having consumers finance long-term solar panels, and they're paying tens of thousands of dollars more than they're worth, and then they're getting them strapped to their roof, and how much they're paying in financing fees and everything like that kind of makes them break even, but they think they're getting a deal. I don't know, man. Use it as a write-off for your business that you run from home. Yeah, for sure. That's probably true. Again, I'm just skeptical, I guess is the point. Like, I might be wrong there. I certainly could be wrong. And solar certainly could be that next big thing that's been happening. I just don't trust salesmen, for lack of a better word. Like, I'm very skeptical in nature, especially from people trying to sell me things. But I just don't trust solar. I don't know if solar is going to really be needed. I think we're going to get better, but and I think if you're going to buy a solar company, you need to find a better one than this one, which has got a really bad long-term trend. Here, that's a good question. Is solar technology going to be around and heavily used in 10 years? Yes or no? That's a good poll option. Let me know what you guys think. Is solar going to be around in 10 years? I've worked for solar companies for 10. I think you're spot on. Lots of problems. Yeah, I mean, you got to understand what drives the industry, which is sales. Whenever sales are good, people ignore a lot of red flags. So with solar, people are making money hand over fist with it right now. Again, all right, guys. So today, Nvidia is all the way. I get the business. I understand the business of solar, right? Like, again, you buy solar panels for, let's say, 10, 15,000. You go door to door. You sell those solar panels to consumers for 5 to 10K over price. You have them finance it, and you earn interest on that. You bring out, you bring people out and have them install it. You pay for it. You net anywhere between $4,000 to $10,000 per house. So if you got some good salesmen that can really talk people into it, it's a numbers game. You just kind of hit as many houses as you can. Boom, boom, go to neighborhood. And I get the business. Like, I understand the business. Seems profitable, to be honest, right? But for me, I just don't want to strap that to my roof right now. I think the chances that technology is going to evolve is so high over the next 5 or 10 years. Even if the solar industry evolves, those solar panels might be obsolete in 5, 10, 15 years. I'm not going to finance those things long term. It's kind of like financing a CD player, 10 years ago. Or financing one of those big TVs that has the huge backs to it. By the time you're done paying that thing off, it's not going to be useful anymore. It's going to be obsolete. Hey, what's up, Beach? Yeah, some of the tech is cool. I'm not against it. Again, I'm just skeptical. Again, I did one of those personality tests. I did a couple of them. I did one of the big 3, I think is what it's called. Is it the big 5? Yeah, so I did one of the big 5. I was trying to see if I could find mine. I was open to experience, conscientious, low in agreeableness, medium in neuroticism, high in extroversion and introversion. So I was like a middle range between extroverted and introverted, low in agreeableness, low in sensitivity, it said. So I'm not very sensitive to other people. I'm not very agreeable, and my wife will tell me the same thing. I told my wife this, and she is never. She of course is now, every time I do something wrong, or John, you're just low in agreeableness. Or every time I disagree, I never, there's that low in disagreeableness, or that high in disagreeableness, but yeah. Nvidia is a clever company. They split the shares. New buyers come from the table there. Yeah, but every big company, once it grows enough, splits shares. It's not like they're scamming people with a share split. That's just kind of part of the stock game. And it's weird because I feel like I'm a polite, kind person. I can definitely agree I might be a little low in sensitivity because I'm very blunt and just kind of say how I feel. But I also feel like it depends on who I'm talking to. If I'm talking to, it depends on who I'm talking to. When is Chipotle gonna split? I don't know. I don't think it matters that much for Chipotle. Chipotle's got a large price, small float. So they've got a tiny float. So I mean, it's not as I mean, I think Chipotle likes their shares high because it makes them feel really successful, and that's probably the kind of nuance of it. But I think they could use a split just to bring that price down some. They need to do a 10-to-1 split or something. Yeah. What's up, Kimberly? Except good day, sir type people. Yeah, for sure. Putting up a solar system is great, but only if you do it yourself. In my area, install is 80% of cost. That takes 2 days with 2 people. Yeah. I understand the argument, the selling argument for them. Again, with solar, my problem, I guess, would be like, okay, so I'm going to install this solar panel. You're telling me it's going to save me all this money long term, but I'm going to spend so much time paying it off, right? Unless you just got the cash to buy it, which I guess is an option. But then you're adding things to your roof. Somebody else said that your home insurance premiums go up because you're adding things to your roof, and you got more stuff that can essentially break now, I guess, is the logic behind that. And, it's just a lot of work, a lot of stress, a lot of headache for a very small bump down in price. And so I think it depends on what you're doing. I think if you are like mining cryptocurrency or growing something, or using heavy amounts of electricity, for whatever it is, maybe you got, a data center in your house, like in your warehouse, like, stuff like that. Then maybe it's reasonable to try to bring those prices down and something like solar. I think that's understandable. But I think if you're just a normal person with a normal family, I don't know if I like selling point. Yeah, Sam. No. I was trying to think of the easiest way to put it. But you know what I mean? Like, if you have an innate need for a lot of electricity, sure, strap some solar panels to your roof. But outside of that, I don't know. I just don't know if it's worth it outside of that. Yeah, Gamestop fighting its way back. So Gamestop went all the way up to almost $25 a share yesterday. Almost up to 25 shares. It's at 24.80s. Came all the way back down. It still held some of the gains, though, so it's still net green yesterday, I think. It's starting to move up now. Here's the previous closing price on GameStop. It's at 23.65, and so we'll see if that area holds or if it can continue to fight its way back. Again, you can see the Nasdaq is up. Nvidia is up today as well. What happened to Solar Edge? Solar Edge has been downtrending for a while, though. I don't know. I'm not really, like I said, this is what sparked the conversation, which is that, You know, I mean, it's down, what, $5 a share, $6 a share. So it's down like 20% this morning in pre-market. But it's been on a long-term downtrend, man. Again, if we look at the long-term downtrend, it was at 350 back in February of 2023. So a year and a half ago, it was at 350. It's at $33 now. I mean, that's just not the stock you want to buy. And anybody buying that up is taking a massive risk. You know, it's just not for me. Yeah, we got some Fed members speaking today. We have specifically Bowman speaking at 7 a.m., so in about an hour. Or no, maybe she's speaking right now. She might be speaking right now. We got the Cas Shiller at 9 a.m., House Price Index. We got CB Consumer Confidence at 10. Can you show us the speaking? Yeah, I mean, I could. I don't think it'll be super important. I'm trying to look that up now for Bowman. So, it's Michelle Bowman. Nickname Mickey Bowman. Fed Gov Michelle Bowman speech in London. So this is in London. All right, so again, she did the speech. The speech is out. I'm going to break it down using AI, so bear with me, chat. Pun intended, maybe. But no, I'm going to break it down. This is a pre-recorded speech, or maybe it's not pre-recorded, but the speech is already out, so I'm going to break it down. It's a lot. I'm not going to read all of it. This is like thousands of words. So again, I'm going to use AI to summarize summarize this. Let me do it. Okay, boom. All right, so in a recent speech at Policy Exchange, a member of the Board of Governors of the Fed system discussed key aspects of monetary policy and bank regulatory policy, focusing on bank capital reform. The FOMC has been so she first talked about inflation. So yeah, she first talked about inflation and policy responses. She said the FOMC has been addressing the inflation surge that occurred during 21 and 22 post-pandemic. The inflation pressures were driven by global supply constraints, increased demand, and supportive monetary and fiscal policies. The synchronized inflation across major economies was influenced by supply chain disruptions, tight labor markets, and fiscal stimulus. In the U.S., these factors led to historically high inflation levels, necessitating a significant policy response. Basically, if you want me to put this in layman's terms, essentially, because of the pandemic and supply chain issues, increased demand, and stimulus checks, okay? Basically, the Fed brought interest rates down and sent out stimulus checks, as well as we had supply chain problems, increased demand. Because of all these things, inflation spiked. Inflation spiked, and that caused the Fed to start raising interest rates through quantitative tightening. They did QE to bring rates down in the first place, then they did QT. If you don't know what quantitative tightening is, so QE is a form of money printing in which the Fed creates online banknotes, basically, and then they use those banknotes to buy up a bunch of bonds. And this essentially prints money, adds spending, causes they do this to bring interest rates down, because whenever they create these things, they buy up bonds, they inject liquidity into those markets, and this forces banks to bring interest rates down to consumers, right? So it's called QE, quantitative easing. The opposite of that is quantitative tightening, in which the Fed steps in and they don't really sell bonds, kind of like QE. They buy up a bunch of bonds. With QT, usually they don't sell bonds. That would be called direct QT, right? So usually QT is what's called passive quantitative tightening, which means that they're just not buying up bonds. They're not expanding their balance sheet. And so when they stop buying up bonds and expanding their balance sheet, their current holdings mature, which means they expire and run off, or they it's kind of like a strike date, Anyways, starting in late 2021, the FOMC began tightening monetary policy to combat inflation. This including raising the federal funds rate, so raising short-term interest rates by 5.25% since March of 22, and reducing the Federal Reserve security holdings, basically QT. And they raised the federal funds rate and did QT. The tightening of monetary policy has led to progress in reducing inflation, which dropped to 2.9% in PCE prices by December 23. However, inflation remains elevated, and recent data shows modest progress, with inflation rates slightly decreasing, but they're still high. Economic activity in early 24 indicates some moderation, with slower GDP growth and softer consumer spending, and the labor market remains tight, with slight increases in unemployment and job openings near pre-pandemic levels. Basically, this year we had slower GDP growth, softer spending. Labor market is still solid, though. We had increases in unemployment and job openings. So international and domestic factors, the U.S. economy has recovered more robustly compared to others, partly due to high fiscal support, and productivity growth has led to a potential divergence in monetary policy paths between the U.S. and other countries. The speaker highlighted the risks of a continuing inflation, including geopolitical developments, fiscal stimulus, and tight labor markets. These factors could stall further progress on inflation and cause it to reaccelerate. So yeah, basically, we don't want to do more money printing. We don't want to bring interest rates low just because we got to wait. I agree. Outlook and considerations. The FOMC aims to bring inflation down to 2%, maintaining the current federal funds rate range. The speaker remains open to raising the rate further if inflation doesn't get better. Monitoring incoming data is crucial to assess whether monetary policy is restrictive enough. The complexity of economic conditions post-pandemic adds challenges to policy decisions. The U.S. has lagged behind the EU and UK in implementing Basel II capital standards. A public consultation on the endgame capital reforms was issued in 23. It includes significant expansions and goes beyond the Basel framework, potentially creating competitive concerns. The response to this proposal has been predominantly negative. The benefit of higher capital requirements includes increased safety in the banking system. However, the benefit at cost, potentially impacting market liquidity, lending, and disproportionately affecting underserved markets. Over-calibration of regulatory costs could drive financial activities out of the banking system into the non-bank financials. Basically, the Fed has initiated data collection to better understand the impact of proposed reforms. Some other stuff. So that's basically what Bowman said. With that said, since I've been reading that, GameStop spiking up to 2360s. Here is a link to her entire speech. Today. It was called Perspectives on Monetary Policy and Bank Capital Reform. And there's the speech right there. Yeah. Money printing period, all the other stuff. Yeah, I mean, again, I say this once, I'll say it again. People are going to be unhappy no matter what. If we didn't print money in 2020 and bring interest rates down, people would be complaining if we're in a recession, depression. We would almost certainly hear, oh, well, they're not doing anything and they're just watching, the U.S. hit a recession or depression. They need to do something, right? That's almost certainly what we would hear, and then when they do bring interest rates down, people criticize them for that and say, oh, irresponsible money printing or whatever. And I think, it's a tough job. You got to ask yourself, it's kind of a pick your poison scenario. What's better, a depression or a recession, or depression or, inflation? I think inflation is the bigger risk currently, but maybe I'm wrong. Anyways, Nvidia did bounce. Look at GameStop. GameStop technically green on the day right now. So GameStop all the way up to 2370s, technically green. Nvidia at 121s. Q's still trying to push you. Fed using the wrong tool to fix the problem? I don't know. I mean, I think like, okay, so imagine you're a politician and we've got the global pandemic happening. Not enough people are working, not enough people are spending, and ultimately the economy's struggling. You know, so what can you do to try to help that? You know, one of the obvious answers is bring interest rates down. When interest rates are low, people spend more. You got more jobs, you got more available work, you got more, you know, reasons to spend. And so I'm sure that was their logic, and I don't think that's bad logic. I think that makes sense. But you know, I think we were at something that has never really happened before in the history of the stock market, which was the pandemic. You know, I think that is something that had never happened before. And so, you know, the situation in general was less than ideal. It's a tough situation. All right, guys. So looking at this number, is solar tech going to be around and heavily used in 10 years? 71% of people saying yes. Maybe they're right. I don't know. Again, I definitely will admit I'm not the most familiar with solar technology. I'm familiar with it, but I don't know it the best. All right, guys. So SPY back up to 544 is kind of breaking highs as well. We're gonna get ready to start day trading. GameStop did tap almost $24. You can see the queue. Look how slow it is, though, man. Look at these weird orders. Very slight, very slow here. Nvidia bounced right at that 200 EMA. Do you think Nvidia will hit 130 again? Eventually. I'm not sure when it's gonna, you know. GameStop bouncing. What are your thoughts? Not asking for financial advice. I mean, it's bouncing right now. Whether it's going to continue bouncing, I don't know. But it is technically green on the day. It was at 23s roughly. It's now at almost 24s. So it has bounced up some. in pre-market this morning. It's also technically green from pre-market today. You know, I'm in GameStop. I hope it goes up. I want to see it go up. I don't know for sure anything that's going to happen, though. No idea what's going to happen. Again, I hope it goes up. I hope it does well. No idea if it's going to. You know, my worry for this is that the movement's going to slow down. Because, again, I've been around for all of the GameStop movements. And so what happens is, like, you get big bull runs, big volatility, big hype. And then slowly that fades down. And then one day we'll probably get another run. And so I might just have to sit in it for that. But yeah, for the time being, I'm just kind of hanging out. But yeah, thank you so much for the donations. Still holding Tesla calls for 200 plus. I expect 150 before the end of the year. Yeah, it's hard to tell, to be honest. What's up, Rick? I am up more than 1,000%, but every dollar their values changes plus or minus 5K. Hey, good luck, brother. That's a lot of risk, dude. I'm not. I just gotta be careful. Most likely a September rate cut at this point. Let's check. So let's check the rate cut odds here. So here's the CME watch tool. So July, 90% are expecting a 25 or a pause. So 90 people roughly are expecting another pause in rates. 10%. This has gone up. Now it's 10%. So this is actually much higher. So again, we still have 10% of people expecting a rate cut for this month in July, and I believe it's at July 31st. Let me see when the next FOMC meeting is. So the next FOMC is at the end of July. So yeah, so the July 31st meeting. September is when it pivots to most people expecting a cut, which is about 61% right now. But even then, 30+% of people still expecting a pause, and 6.5% of people expecting a 50 basis point cut. So we'll see, chat. We'll see. I think we'll get one cut this year, but I think that might be it. And I think that's probably the right move. I don't think we should pander to people that just want a low interest rate for business reasons. I think that we should understand that inflation is the priority. You know, one thing that you see on the internet, is like most people that you end up seeing on like Karen videos or whatever, they just have problems controlling themselves. They just can't control themselves. You know, so people tend to like they get their pride in the way, they start to get all weird, and then they end up on the internet. Not me, you know. Gotta make sure I don't sip this old coffee. All right, guys. Hey, thank you, Network. I appreciate it. Hey, thank you, brother. I appreciate it, Network. Thank you, sir. So being brought down 20% from all-time highs, brought the value down in these contracts. J-Powell needs to take a vacation. I mean, Nvidia is selling to... Yeah, so I think that we did have some news regarding Nvidia. Let me check this out. Yeah, we got CB Consumer Confidence today as well. So this morning, Nvidia announced a partnership. Let me see. Let me make sure this is right. I gotta check AI. So like we bounced up a lot this morning. So I see big news about it dropping 6.5%. But did any other news come out? It's hard to tell. When was this news announced? So this is honestly AI. Yeah, Nvidia at 121s. It is up today. All right, so Nvidia announced a extended collaboration with Amazon Web to advance generative AI innovation. It aims to enhance the development and deployment of AI apps across sectors, including healthcare and life sciences. All I know, guys, is never ever buy the cryptocurrency. What's it called, bro? Like the bots are freaking like AWS 170K, dude. AWS 170K. What they're trying to do is make it seem like it's Amazon, but these are scammers. Never trust any crypto that spams bots to users. Because that's what they do. You know, and I would be very careful. They got a lot of YouTubers that are making videos. You know, they got a lot of big YouTubers that are making videos about this. Unfortunately. And so, yeah, you shouldn't trust anything that spams people like that. Chewy, my trade of the week, Nvidia bears today. You mean C3 AI? No. Yeah, any crypto comment you just want to ignore. AI is in a big wedge. I haven't even looked at C3 AI recently, though. Let me see. I mean, it's down so much on the year, and now it's kind of sideways. I don't like. I remember covering this one when we had earnings, but just be careful. Chewy, I think I'm in Chewy. Yeah, I'm in Chewy. Yeah, my portfolio is pretty green this morning, mostly driven by Treasury bill, T-bill, Nvidia. All right, so during volatility markets, my T-bill positions do well. Yeah, so again, I'm holding T-bill. So yeah, my value of T-bill. So we bought again this Treasury bill ETF right here, and this is like one of the way I'm hedging here. So here's T-bill, right? You can see I've got $1,400. Or I've got 1,400 shares of this position. If you don't know what this is, right? So this is about a $60,000 position here on TBIL. What this is this is a Treasury bill ETF, right? So they pay out monthly dividends, and their current, hold on, let me see. Let me make sure. So it's about 5.22% annually, right? So 5.22% annually. So yeah, every week they pay me the equivalent of this, right? So every week they pay me this. So you calculate, I'm spending about 60 grand in this position. Per 60 grand in this position, they're going to pay me about 5% a year annually. So that would be about $3K a year in annual interest rates payments for T-bill, right? So divide that by months. They pay me about $250 a month. So on a weekly perspective, there's about 4.3 weeks in a month. They are paying me out about $60 a week. You know, $60 a week in dividend payments is how they're paying me, right? So this will pay me about $60 a week. I'll take it. It's good, you know. Yeah, today we got consumer sentiment. How long before someone impersonates you with AI mass peddling cryptos? I mean, you guys know me. But yeah, so this is basically Treasury bills. And again, the reason I'm investing in this is because I've got like my portfolio is only like what I'm actually investing into stocks is only 20K, 10 to 20,000. And so I've got all this money sitting in this account that I don't use. And so if I'm not using it, I might as well make something on it, right? Is my logic here. So it's like I can park that 60K into this and just make small little amounts of dividends. And so even if I'm not using that 60K, because again, things are kind of extended right now, I'll at least make some interest on it. And that's kind of the logic of just kind of parking money there. So if you're not using it, you still profit something from it. All right, so again, there's T-bill. Nvidia is the real. Look at GameStop. GameStop back green on the day. We're gonna get ready to start the day trade. We did make some money yesterday. So we did really well yesterday on our trades. Yeah, so it looks like Apex got things back and running here, which is good, man. It took them a little while, but they got things back running. All right, so today, wait, today's CB consumer confidence, right? I want to make sure. Let me launch this. So yeah, yesterday we're up. Yeah. Yeah, this is already AI John, you know. So John, honestly, the so-called correction on Nvidia looks more like a dump, a mockery on a big scale. Looks more like it's taking all it was giving. I mean, here's a daily chart, sir. Like, it's all love here. I disagree. The reason I disagree is because this is all Nvidia's giving, you know, and then this is the dip. So I mean, you know, I disagree. I think the chart proves otherwise, kind sir. You know, again, Nvidia is up 100+% on the year. Nvidia dipping down $20 a share is not the end of the world. And I think it was too high to begin with. Again, it's to a point where I'm in Nvidia. I hope it goes up. I want it to go up. And I've made a lot of money on Nvidia. And I've also taken some profit, but I'm still in some of it as well. So maybe that influences my bias here. But, you know, I mean, I think it dipped down to 116s and bounced back. And basically, it's only slightly down over the last 24 hours. You know, we're basically where we were at the open yesterday, you know, a little bit low. And so I think we had a really red day, and then this morning in pre-market we corrected. Thank you, but them saying it's going to go down to 90s again. Yeah, but I mean, I don't think that really matters. People have been saying Nvidia was going to crash since it was at $400. You know, I know a lot of people that were heavily in put options at $400 or $500. And so again, I just think that again, the easiest way for me to always put this is like, I had people telling me the stock market was going to crash here, you know, and then it did one of the biggest rallies it's had, and it did 24% last year in 2023. And so I don't think listening to what other people say is always the right move. Nobody, again, I'm trying to be balanced. Nobody knows. So again, Nvidia, I think if we do crash, it's going to be something like that, where we have a massive correction in Nvidia. If Nvidia drops down to $700, $800, $600, I think that's going to cause a market crash or a market correction, bear market. It definitely. You know, again, what I talked about it earlier is I'm not saying that's going to happen. The question we have to ask ourselves is, did we learn anything from 2000 in the bear market that came afterwards? And again, I don't know. I think AI really is that the next big game-changing technology that people are going to use wildly over the next 20 years, 30 years, 40 years, and longer. But the question is, do we hold the gains that we've made? I think the best thing for Nvidia right now would be sideways action, sideways neutral action. I think if we can just stay sideways for an indefinite period of time, I think that's great. I think that's what we need. But I'm not a big believer in like every bear, like, look, like something like this is necessary, you know, like we're not going to be able to sustain gains like this without a pullback, a small little dip. Again, it's necessary. We need to pull back. We're not just going to go straight up. But I'm also not a big believer in like every pullback, it's the end of the world market crash scenario. I think I've heard that every major dip, every major bull dip, like dip that we've gotten after bull runs, I've heard it, and again, most of the time people in that regard are wrong, and they're just kind of saying, like, most of the time it's confirmation bias. So most of the time people missed out on the run, they missed out on the gains, they missed out on the big bull runs, and so now they want it to come back down so that they didn't miss out on too much, right? So they can say, aha, see, it didn't even hold its gains, I didn't miss out on anything. That's where most people that are pushing for that, that's where their bias is. But again, mine is somewhere in the middle. Like, I understand we could correct. It depends on Nvidia specifically. I think Nvidia is going to lead the market, and if Nvidia has this big pullback, I think the rest of the market will as well. But I think it's certainly not a definite thing. So, but it's all love. What are your thoughts on AMC due to other movie companies like Cinemark went up in stocks, but AMC is down? The sales on movies seems like it's recovering. Yeah, I think the movie theater industry is a tough thing. You know, I'm in AMC. I want it to go up. You know, and I hope it goes up. And I think there's some strength. I think movie theaters will always be around. But I think something that we've seen over the last 5 years, and this is something that I've been very vocal about, something that we've seen over the last few years is that the movie theater industry has changed. And I think that's a very self-evident thing. I think the movie theater industry has just changed. What I mean by that is, like, movies are being much more strict in terms of what movies they do press runs for in theaters. They don't debut as many movies in theaters as they used to. And so and again, it has to do with risk. You know, why risk tons of money to put a movie in theaters that might not do that well? It also reflects consumer interest, I think. But movie theaters with that have evolved, and they're, you know, now basically most movie theaters are like full on, like, wait, like you get waited on at a movie theater now, which is a cool aspect of it. I like. You also can like save your seat now instead of them overpacking a theater and you got to find seats. Now you can reserve your seat online, which I think is a good move. So they have evolved some. I guess my thoughts here about movie theaters is that I think they're going to lose interest versus like their heyday 10 years ago when everybody was going to movies. I think they're going to lose interest, lose business there. But there's always going to be some business that they have, right? So I think movie theaters are going to dip a little bit in terms of interest, and they already have. But I always think people are going to go to movie theaters, so I always think they're going to be around. You know, AMC struggles versus Cinemark have to do with their margins. Like, if you look at AMC EPS, which is their margins, AMC's margins are just not as good as Cinemark's. They're just not as good. Like, if we look at these, you know, AMC has struggled to really make money like that. So here's AMC's EPS. They've mostly been losing money for the last 3 years straight. If we look at Cinemark, you know, we can look at a very similar graph here, which is the same thing, margins. And again, I'm in AMC. I want it to go up. I think it's got a lot of supporters. You know, but again, when we look at something like Cinemark, you know, Cinemark, it did, like, the last 4 quarters, 3 out of the 4 were decently profitable with only one small loss there versus AMC, where they have lost money 2 out of the last 4 quarters, and when they made money, it's a much smaller per share increase. Like Cinemark, $80 cents a share, 60 cents a share, 20 cents a share, roughly 4-cent share loss. This is like, you know, almost $1 per share loss, 60 cent per share loss. So their margins are worse. That's the lens you have to look at it under. But again, with that said, I think AMC could do well. I think they have a large following. I think movie theaters will always have people interested in them, and I hope they do well. I hope they continue to run up. So we'll see. Pullbacks are healthy. Yeah, I agree. I think pullbacks are good. Struggling to stay long term. Seems like it's hitting my stop. Yeah, maybe. I agree with you, bro. I'm future ready. I agree it's just a pullback. But what I'm saying is last time I pulled back went 20% from 9 to 7s. Yeah, I mean, again, I don't know how big we're going to pull back. I think $100 is probably the big level that you want to watch for Nvidia. I think $100 is a massive milestone level. It would be the pre-split price of 1,000. I think that's the level I'm paying attention to for sure. Do you still have Boeing? I think I sold my Boeing position. Yeah, I'm out of Boeing. I sold Boeing, I don't know how long ago, but I've been out of it. Okay, I sold Boeing. Dude, look at that. I got out of Boeing, bro. This is probably like one of my best exits here. I got out of Boeing at 189.35s. 189.35s is where I sold Boeing. Now, it was a small position, but like I got out literally at the top. Look at this. So this is, I'm out of Boeing now. And again, check that out. That's where I got out of it. I literally cut that one right at the top. I'll take it. Avoided this massive dip. So yeah, we did that with Boeing. So I'll take it. I'm happy about it. Movies suck now compared to the 80s and 90s, early 2000s. Yeah, but that's more nostalgia. Like we're nostalgic towards movies that we watched in our childhood and teen years. Everybody's like that. Yeah, streaming has changed things for sure. $10 drinks, $10 popcorn, it's insane. Yeah, but are we really gonna act like movie theaters haven't been ripping us off for the last 40 years in prices? Bro, every day, popcorn's always been expensive. Like, just the inflation that we've had over the last 5 years is making it seem worse than it is. AMC likely to dilute before the box office recovers. Stocks continue to be weak today. I don't know if I would call stocks weak. Yeah, I mean, the Q is green on the day. Nvidia is green on the day. Gamestop's green on the day. I don't know if I'd call things weak. Yesterday was weak, but we've bounced back a lot in some stuff, so. Yeah, I certainly think companies like Netflix are taking away business from theaters for sure. We also have direct to streaming now. So, but again, I think movie theaters will always be around. Again, I think they're just going to lose business over time because people are going to go to them less and less because of technology growth. Boeing's not really going up. Boeing went up. I sold at the top basically, and now it's back down. But I wouldn't call it going up. I just bought it. I bought it when it was really low. We had that bad news come out. I bought that dip when it was really, really low and rode the bounce back is what I did. Yeah, it's like an event. It's like you go on dates, you go for the experience. Yeah, I like movies. Yeah, so Bowman had a speech early this morning. Today we got CB consumer confidence data coming out also. So that's big. We'll see what happens there. Yeah, the story of Netflix is actually a really interesting story. Like there's a couple parallel stories like this in Hollywood. I'll go ahead and tell it. So the story of Netflix is interesting. So, and this is a really important look at the older generations and their bias towards technology and how that negatively impacts companies, investors, stocks in general, all that good stuff, right? So basically, Netflix started off as a mail order DVD company. So they would send people DVDs through the mail. So pre-DVDs, right? Pre-DVDs, you had VHS tapes, which are going to cost noticeably more to ship. They're like this thick, this big. You're going to have to send them in the mail. It's going to cost a lot more to ship those things. Once DVDs came around, it went from huge size down to super thin, like DVDs that you could essentially put in envelopes and ship. Very cheap, right? So once that happened, a company called Netflix sprouted up off the ground where they would essentially allow you to rent DVDs, but they would ship them to your house. And then when you were done with the movie, you would pick another movie out, return said movie, and rinse and repeat that and watch as many movies as you want, getting it shipped directly to your house. So that's how Netflix originally started. They were shipping DVDs to people, letting people rent DVDs through the mail. Now this is right in the heyday of companies like Blockbuster, who were like the biggest movie rental companies in the world. If you're too young to remember this, you used to be able to go to a Blockbuster, rent a movie, take it home, watch it, go back to Blockbuster, return it, rent another one, so forth and so on. Keep kind of rinse and repeat that. Pick out movies, all that good stuff. I loved Blockbuster as well. Blockbuster was fun. But point is, that's how Netflix started. They sprouted from the ground in that regard. And Netflix actually wanted to partner with Blockbuster. I think either they wanted to to get acquired by Blockbuster. They wanted to partner with Blockbuster and kind of, you know, turn them into one company. And the CEO at the time was an old man. Let me see, who is the CEO? So yeah, so I'm trying to see who it was. So yeah, Mark Randolph. So yeah, so basically Netflix went to Blockbuster and said, hey, we'll sell you our company. You can buy our company right now for $50 million, right? Like, hey, we'll sell you Netflix for $50 million. The CEO of Blockbuster at the time, let me see. In 1997, let me see. The CEO of Blockbuster at the time was this old man named John Antioco. And basically he laughed in their face and said, no, like, we're not going to do it. Like, you know, like, movies are always, you know, we lead movies right now. We're essentially not going to do it. Right. And again, this was when things started to change technology wise. So this is, again, when Netflix would send you DVDs in the mail and you could rent them through the mail, and Blockbuster was a physical store that you could go to rent movies. Anyways, John Antioco, I think was his name. It might have been somebody else before him. Basically said, nah, like, we're not selling you. We're not buying you for $50 million. You know, we're going to beat you anyway, blah, 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 blah. People are always going to want to come to the physical store. Basically, his argument was that people like the experience of renting movies, you know, and how short-sighted he was. And again, this is the problem with a lot of older people, is that they're very short-sighted in technology. Like, they fear, like, everywhere in the history of the world, the older generations fear technology. They fear technology growth. They don't understand it. They fear it. And so because of that, they miss out on these massive tech runs. Like, I would assume that a lot of people that missed out on this AI tech run are the older population, the older generations. And this happens every single time. It's not specific to AI. It happened in the early 2000s with the internet. It happened with Blockbuster. It happened with all these different things where they're short-sighted and they fear new technology. Eventually, Netflix evolved, started streaming. And that's really when Blockbuster went bankrupt, is when Netflix started streaming. When you started to be able to stream movies from Netflix, from home, nobody needed Blockbuster anymore. You know, so Blockbuster didn't evolve. They had the chance to buy Netflix and grow their business, and they'd still be around. You might be streaming movies on Blockbuster if that was around. But again, unfortunately, they were short-sighted. They feared new technology. They didn't evolve their company, which is a very common tale. And ultimately, Netflix is now worth hundreds of billions of dollars, and Blockbuster is bankrupt. So again, it goes to show, listen, older generations out there, don't fear technology. You know, technology, it's going to grow. You know, the people who created carriages feared the automobile, you know, and that's just how it goes. But you can't fear it. You got to embrace new technology. Yeah, he fumbled for sure. Yeah, so again, I'm not saying Netflix killed Blockbuster. What I'm saying is that Blockbuster didn't evolve. Blockbuster had the chance to own Netflix for $50 million, a relatively small amount of money for them at the time, right? This is in the middle of Blockbuster's heyday. It's 1997. You know, Blockbuster, one of the biggest companies in the world. You know, they could have bought this company, Netflix, early for $50 million. Very cheap amount back then to Blockbuster. It's not super cheap, but it's definitely not. Like, they could afford it back then. But again, famously, the CEO of Blockbuster sent the CEO of Netflix, Reed Hastings, it was either a picture of a kitchen sink or something like that, or maybe it was a kitchen sink.
Yeah, John Antioco is the guy. He sent him basically saying we're throwing everything but the kitchen sink at you. He got too competitive. He should have just bought him and moved on, you know. I don't understand why people even pay for Netflix, because I can watch 95% of the stuff they show for free. Yeah, I mean, I think a lot of people get really interested in saving money. But I think you have to understand, when people make a certain amount of money, it's not about saving $1 or $2 or $5 or whatever. It comes down to saving time and energy. You know, at a certain point, your time is worth more than the $5 or $10, $15 a month that you're paying to watch Netflix. You know, how much time is it going to take to consolidate everything you watch on Netflix? How much time is it going to save people? And so I think that's the lens you have to look at it under. Once you get into people that make more money, is because they're not worried about $15 a month. They're worried about time. And you know, you might be able to find things for free outside of Netflix, but how long is that going to take you to consolidate everything and find it? It's going to take much longer. It's going to be much more difficult. There's also risks to like your computer if you're downloading things illegally. Like, again, it's easier to just save time, spend $15, and you're going to have a net gain on that because you're going to save time. Hey, well, good luck, Corey. I hope you make some money, brother. I don't know. I don't trust Solar Edge. I think Solar Edge is a terrible looking company that, you know, I don't mind buying up weakness in a blue chip stock that's been around for a long time, and it's kind of like a legacy company that's been thriving. Again, I gave the stream this earlier. I don't mind buying this, right? If it's a blue chip stock that's gone like this and now it looks like this, that's one thing. I don't mind buying that dip because I think it's very possible that we're going to get a rebound and continue in kind of like a stair-step pattern. I don't mind buying this dip because it's very likely that we're going to get something like that. Solar Edge, on the other hand, is doing something like this. All right, so Solar Edge has been downtrending since 2021, 2022, and so this is different. This is not a long-term healthy company. This is a company that's been downtrending for years now, since really the beginning of 2023. For the last year, Solar Edge has been downtrending. And so, yeah, that's a different thing. Something I'm certainly not buying up because it's just different. If I buy up weakness, I'm buying up weakness in strong companies. This company is down from $3.50 to $30 in a year. That's weak. I'm not buying that. Yeah, my favorite show on Netflix right now is the King of Collectibles show. I think that show's fun. You know, the King of Collectibles about golden auctions. So we got CB Consumer Confidence today. So yeah, we got CB Consumer Confidence. We've got some Fed speakers. We're gonna start to day trade as well. Let's do it. Saving money is great. Yeah, businesses raise prices though. I mean, I think Netflix is still very healthy. I've liked Netflix for a long time, just because I think Netflix, you know, you could see, I'm not buying it up right now. It's too close to lifetime highs, but I think Netflix, I might short this actually here as well. So we got one contract, but I think Netflix, the content that they're producing is higher and higher quality. You know, they're producing their own movies now, which is kind of changing the industry. And so I think they're on the forefront of industry change. And so I like Netflix as a company, although I'm not buying them now. They're just too high up there. They're too close to lifetime highs for me to want to get involved now. Maybe if we have a pullback, I'll buy it though. All right, so we just bought the, we're shorting the NASDAQ here. We're down slightly. We'll see if we keep, you know, I could add to this. I think it's too risky though. I'll probably just let this sit. You know, remember yesterday we made hundreds of dollars on this account, so we got a lot of cushion. All right, we're about flat. Put this on screen so you can see it a little bit better. We'll probably get ready to cut this. Just too big of a bounce. So yeah, we're out. First little loss. Pull up Quant Tower as well. Got wrecked on Fubo TV. I don't know, dude. Honestly, from using Fubo myself, I'm a subscriber to Fubo. I used to be a big believer. Over the last year, Fubo is incredibly expensive versus other options. So Fubo is super expensive. Not only that, but their software is not good. Like, their software is bad. It's bad software. Like, here's an example. When you search for anything on Fubo, right? When you search for anything on Fubo, the search function is horrible. Like, okay, say I want to watch the movie Heavyweights, right? Say I want to go watch the movie Heavyweights. If I type in heavy, the movie Heavyweights doesn't show up on the search option. You know, I literally have to type in the full movie title just to get it to show up in search. And so that's a bad sign. I don't like Fubo as a company. Even though I'm a subscriber to them, I just think that, you know, they're not spending enough money on their bottom line. And I think that's a problem. And they're really expensive. Like a Fubo package is like $100, which is much more expensive. You can get Hulu, you can get YouTube TV, you can get a bunch of other stuff for much cheaper, much better. All right, so look at this big rip in the NASDAQ. So the NASDAQ bouncing back up. All right, so we're still bouncing up a little bit. I still want to short. All right, so we're in one contract short. See if we can make some of this money back. 2025. We'll go ahead and scalp that out. What am I down? I am down $60. Okay, not too bad. We got a big upwick. I could have held this a little bit longer, I think, too. So we did get a little dip here. Again, Gamestop's still holding technically green, and again, the NASDAQ has bounced all the way back up to 470s. I don't know if it's going to continue back up, but it's trying. short Nvidia, I'm good. You know, I think one of the big things people get wrong is that retail traders get this bad idea that shorting the healthiest companies in the world is somehow a good idea, right? Like, even if you're right, it's just such a risky thing, you know. And again, for whatever reason, I think people get too aggressive shorting the healthiest companies in the world. Nvidia, one of the healthiest companies in the world. Apple, one of the healthiest companies in the world. But again, a month and a half ago, 2 months ago, people in Apple were talking about how Apple was done and it was out of the Mag 7 and how it was, you know, they were acting like Apple was actually weak, right? And again, I don't know what gets in people's heads, man, what gets in traders' heads where they think shorting these companies is a good idea. Again, I've said this before, maybe it's the big short, you know, maybe it's like these, like they're making short bias traders look really cool in some of these movies and stuff, and I get it. The problem is that the edge shorting these companies is low, you know. So I'll say this, and this is the easiest way to understand it. The amount of edge that you get shorting a blue chip stock is very small compared to the edge that you get longing a blue chip stock. You know, the longer you hold a short position in blue chips, the less likely you are to make money. The longer you hold a long position in blue chips, the more likely you are to make money, because over time, blue chip stocks are going to go up. Mostly. Over time, the S&P 500, the NASDAQ index funds, the Dow, over time, these are going to go up, right? And now when you compare that to shorting blue chip stocks, it's the opposite. So again, if that's true, and long term these companies are going to go up, then it makes absolutely no sense to short them, you know, unless you're talking like really short term. So we're going to go ahead and cut that. So yeah, we're only down to $30 loss on the day. It just makes absolutely no sense to short them. As I'm shorting the S&P, I can day trade, but what I'm talking about is like trying to short. The longer you hold a blue chip stock short, the less likely you are to make money. You know, so it's just a silly thing. Why even try that? It doesn't make sense. You know, I've seen too many people wrong about long-term short positions, especially in Nvidia. I know a lot of people that were shorting Nvidia at $400 and $500. You know, and then now Nvidia's at freaking a pre-split price of $1,200, and they lost thousands and thousands of dollars doing this. You know, so just be smart, guys. Play with the big edge, and the big edge is longing blue chips long-term. I'm not saying you can't short, but you need to short-term, pun intended. You know. Right, they're trying to convince themselves because they're, yeah. Did Bitcoin bounce? Yeah, I mean, Bitcoin's back at 61K. It looks good. I mean, you know, Bitcoin's up so much. I don't expect it to constantly break lifetime highs or anything like that, so. And again, we are day trading on Apex. Right now on Apex, they got the 80% off sale and 1 day pass going on right now. So for the time being on Apex, you can get started, learn to day trade with limited risk. This is the single best way to learn day trading with limited risk. In the futures market, which is what this is, there's no PDT rule. You can day trade the S&P, the NASDAQ, basically the SPY and Q, and there's no PDT rule. You can day trade short, buy market, sell market. You can see me day trading it here. No PDT rule. Great way to learn day trading, and really a powerful edge if you can learn it. What Apex does is they give you a demo. They test your skill with a demo account. If you pass the test, they fund you the same amount. The base one, you get $25K in a demo. If you can make $1,500 without losing $1,500 and following their rules, they fund you $25K with a 90% split. So once you're funded, if you make $20K, you get to keep 18 of that. You could fund your own account with it. If you lose, this is $40 if you use my coupon code BT and my link and coupon code. $40 a month right now. You can also get the $150K, $250, and $300,000 challenges for the same price, $40. Very cheap. If you lose, you're out $40. It's not the end of the world, but you're still risking something. And so it teaches you how to trade under pressure with limited risk. And it's just a great way to learn. If you're a good trader, you can get funded, make your own money, withdraw it, and they pay out millions, and then you can fund your own account. Apex is one of the most legit in the world. They pay out millions and millions of dollars. You can see the sale, 80% off 1 day pass, meaning you'll get funded today if you pass it today. They've paid out over $200 million. They're up to over $210 million in customer compensation since 2022. They pay out an average of $12 million plus a month, which is an awesome stat. So again, check them out. Great way to help support your boy here in this channel. And they do a really good job. Like, they've had platform glitches and stuff like that have been kind of universal with platforms. They refreshed all of my accounts, fixed all of them. So if there's problems with the platform, they do a really good job of rectifying it and fixing it. So check them out. Here's the link. Can you explain why Under Armour has 2 shares? Yeah, I mean, so each individual share has different voting rights. So Class A has more voting rights than, what's the other Under Armour? Than Class C, right? So Class C is going to be a little bit less expensive versus Class A, which is at 713s. Class C is at 695s. So there's going to be slight differences in price, but this has to do with the voting rights of its shareholders. So if you buy Class A shares, you have more voting rights. If you buy Class C shares, you have less voting rights, right? This is kind of similar with like Google. You know, GOOG, I believe is Class C, has less voting rights. It's currently at 180.79. If I put in GOOGL, or maybe if I put in GOOGL, this Class A, you know, it's a little bit less expensive. So yeah, it has to do with voting rights. So we're popping up again. I was gonna short this again, but I guess I'll just wait. All right, so yeah, and you get to keep your first 25K, sure. Nvidia pulling back to the end of June only to tear. Yeah. Ooh, I got a new watch, chat. I got a new watch. I'm super stoked about it, dude. Y'all want to see the new watch? Y'all want to see it? Should I go get it? I can show you a picture of it, which probably will show it to you better, or I could actually go get the watch. Let me know what you guys want me to do. I'm kind of a watch guy. I've turned into like a watch nerd. All right, so we're gonna short this really quick here. Up a small amount. How about House of Dragon too, man? I'm stoked about it. Slightly green. There we go. I'm going to cut that. So we're basically flat on the day. We lost a little bit. We made it back. And again, this is day trading futures that you can see right here. Here's Gamestop. Gamestop's still trying. Nvidia trying to break under that 200 EMA. Look at this right here. And then we got the Q sitting tight. So I got honestly, I think I like this watch more than my other one. So yeah, I think I like this one more than the other one. It's a little bit dressier of a watch, but I just like the style more. Again, I've been kind of turning into a watch nerd lately. So this isn't my picture. This is somebody else's picture. But this is the same watch. Check it out. Is there earnings this morning? So we did have Carnival Cruise. So Carnival Cruise is scheduled to drop at 9:15. So they're going to drop in about an hour for CCL. Technically, that's when they're scheduled. So they're technically scheduled for 9:15. So about an hour or so. So there goes Nvidia bouncing up a little bit. Again, the Nasdaq's still up some. Usually I like shorting these big moves. Let's see if it works. Boom. All right, so we're up $20 on the day, kind of scalping it. Can't find the CCL earnings. Wanted to watch it live. Yeah, so. Watch looks lovely. Same problem with nickel in the strap though. No, so this one's partly gold, right? So this one has gold. This one's two-toned. So this one is gold here. So this one doesn't bother my wrist at all. Honestly, the other, I don't know if I'm allergic or I just needed to wash the watch. So I think I just needed to wash the watch, right? So I washed it. The Batman that I have, I washed it, and it stopped. My wrist stopped reacting to it. You know, but yeah, this one has gold in it, so it shouldn't cause it, even if I am allergic to nickel, which I'm not 100% sure if I am or not. Yeah, it's a Submariner. Yeah, I wanted a Submariner. The last one I got was a GMT. All right, so again, Nvidia bouncing up a little bit. Again, it went down to that previous closing price, or that 200 EMA, I mean, bounced directly off of it, went all the way back up. The Q's starting to follow it up as well. Again, it depends on how much we think Nvidia is going to run here, is the question we have to ask. Passing on some AMC info for those interested. They had $624 million in cash and cash equivalents as of March 31st. Given current box office info, expecting $150 to $250 million cash burn this quarter. May or might not need more cash, or they definitely would need to do some debt for equity swaps. So either way, further dilution is basically a certainty, just a matter of time. Next year, the box office could get back to the levels we need to see before AMC making money. Yeah, for sure. They're close to it now. Alright guys, so again, Nvidia up to 121.30s. Q's still trying, but it's kind of losing steam. DDOG, Datadog, annual dash event today at New York Catalyst produced. If Nvidia could go up and pay for my mortgage, that'd be great. I mean, how much more do you want it to go up though? I know a lot of people are in it, but when did y'all get in Nvidia? Because again, it's up so much, I'm just skeptical. So Gordon Ryan competed with Josh Saunders. I'm trying to watch this now. How did he finish him? He had to finish him, right? Looks like he's trying to get a knee bar here. Looks like a heel hook. Heel hook's the move, man. Nobody plays with heel hooks. Yep, heel hook. Bro, Gordon Ryan's he's the GOAT, man. Problem with these is like, I don't know how realistic these heel hooks are to real life. Because in real life, if you're trying to heel hook somebody, your head, like, they can just come up, whoa, you know. So in terms of like pure self-defense jiu-jitsu, I don't know if it's as applicable, but heel hooks are nasty, man. They happen quick. Knee bars are scary. I would have added again today if I pulled back. My price target is 150 to 4. Yeah, maybe. I don't know. So here we're finally starting to get a dip. We've been day trading all morning. It's been going pretty well, fairly well. Yeah, I mean, I'm in Texas, so I mean, you know, we're a big self-defense state here. I'm more of a Sig Sauer guy myself, you know. Anybody ever heard of EMCD crypto? What is EMCD? See, I'm using AI with everything to query anything. Mining pool that allows miners to combine their computing power to mine various cryptos. By pooling resources, they increase chances of mining blocks and earning rewards, which are then distributed. Multi-currency support, payout system, low fees. I don't know. Yeah, I'm just kind of scalping right now is what I've been doing here. Nvidia, I'm watching Nvidia. This is something you'll see me do a lot, which is I'll watch Nvidia, or, you know, something I think is going to move markets. And then if it makes a big move in one direction, I'll kind of take the appropriate trade based off of that direction, you know. So if Nvidia pulls back big, I might short the Nasdaq. If it bounces big, I might long the Nasdaq. It just depends. So I kind of watch a lot of these blue chip stocks in that way. Yeah, we got CB consumer confidence data later on this morning, and we got the Cas Shiller house price index at yeah. At 9 a.m. we got the Cas Shiller. Yeah, so we get the Cas Shiller at house prices. All right, guys. So Yeah, Cas Shiller House Price Index. All right. Again, we got CB Consumer Confidence. There's a dip here. I don't really traded. We only up 20 bucks. Although we've kind of gone back and forth. We were down almost 100 and then we made it back and now we're up 20. Apple just broke highs again too. Oh yeah, we got Canadian CPI about to drop right now. Let's see. So there's Canadian CPI out. You can see the market actually react to it here. So Canadian CPI is out. It showed up at higher than expected, 2.9% year over year. Month over month, it came in at 0.6% versus 0.3%, and core CPI came in at 0.6 versus 0.2. So Canadian inflation came in much higher than expected, almost universally. Again, CPI month to month for Canada came in at 0.6 versus 0.3% expected. 2.8 median CPI year over year versus 2.6 expected. CPI month over month came in at 0.6 versus 0.3. And year over year came in at 2.9 versus 2.6. So yeah, Canadian CPI showed up higher than expected almost everywhere. So, you know, again, people are going to act like it's the end of the world. But again, as we read in Michelle Bowman's speech this morning, you know, we're kind of moving independently to Canada, if that makes sense. So again, here's Canadian CPI year over year. We're kind of moving independently to Canada. Yeah, we did get a bigger reaction for Canadian CPI than I expected here. And again, I think higher CPI is worse for everybody because again, this is gonna, again, if you want rate cuts, this is the opposite of what you want. You know, if you want rate cuts, this signals less of a need to cut rates or less of a, you know, this signals more inflation problems, which would push for more restrictive monetary policy and more hawkish stance by the Fed. Basically, this signals less likelihood of rate cuts if inflation data is worse. But again, Canada's not really us. But we have had a pretty major reaction. Like, look at this reaction we've gotten from Canadian CPI. So, interesting. No, I mean, I definitely disagree, Sam. I don't think... I think you're looking at technical moves, but usually this isn't... again, technical moves typically do not look like this, right? Like technical moves are usually not volume spiking. You can see the volume spike here, big rejections. That's just not what technicals typically do. Usually technical moves are a little bit more slow and kind of methodical. This looks like an economic release, which makes sense when it lines up exactly with Canadian inflation data coming in higher, like worse than expected. You know, so again, I disagree. I don't think this is a technical move at all from a candle closing or anything like that. I think this is much more likely to be a Canadian CPI reaction. But again, it's all good regardless. Nvidia is still dipping down some. Again, look at the Q. Q is now under the VWAP, under the 200 EMA. I'm going to short this. See if we get anything. Well, now we're down. We'll give it a little bit of time. I can also add to this. I guess we'll try it. Down, flat, boom, caught it. Nice, so we're out. So we just made about $60, a little bit more than that, maybe a little bit less than that actually. So not a bad little trade there. ChatGPT is public. If you want the better one, it's going to cost a little bit more monthly, but it's not super expensive. It's like 20-30 bucks a month for the good one. Yeah, I mean, I feel you, Sam. Again, I certainly think this is not technical. Like, you got to look at it in terms of like probabilities, right? And I would argue that when we get what I think is the determining factor here for my argument is this volume spike. Typically, volume spikes like that do not happen. Like, this is the biggest volume spike we've had all morning, essentially, right? And so the likelihood that that is from a technical reason at the exact same time as Canadian CPI is released, I think it's very low. Now, I think your auction theory in terms of price discovery bids and stuff like that, I think that makes sense, and I think that might contribute to the higher volume and liquidity spikes that we got at the same period of time. But I think this is mostly the Canadian CPI data. Canadian data came in bad. It came in much higher universally everywhere. And so even though it's different markets, I think that's what's causing this dip. But with that said, we did just great. Again, you could be right. I'm certainly not saying I'm right and you're wrong. Like I said, I don't agree, but it's all good. That's the nature of the market. So it's all love. Anyways. If someone's on the internet, I am always 100% correct. Yeah, 100% of the time, I'm right every time. You know, 20% of the time, I'm right 70% of the time. So, you know. All right, look at the spike back up here. So, again, you got to go look at what Michelle Bowman said earlier. What Michelle Bowman said earlier is that, like, while other countries might have differing outlooks for monetary policy, you know, ours is one, like, basically we differ from other countries right now, is basically what Michelle Bowman said earlier. Please look at the half-hour chart. So we can look at, yeah, so this candle recently opened up. All right, so we're topping the range here. I'm gonna short this. Oof. And I don't know, part of me is like, should I add to this? I guess I'll take the risk. All right, I'm gonna cut this. So I'm gonna get out risk averse here. And so I was in heavier. I cut it for a loss just because, like, it turned on me quick, and so I'm gonna avoid a big $100+ loss here with at least a small win, hopefully. But I'm gonna give it time to see if it corrects and comes back down and maintains a choppy direction. We got a little bit of room here too. I'm not really worried about $20, $30, $40 in gains. I'm worried about using my cushion effectively, where if I build up a cushion, great. If not, it's not the end of the world, you know. So if I can build up a cushion, awesome. If not, you know, we're going to be break even anyway, or small loss or whatever, but I can use this cushion to take larger risks, which is kind of what you see me do now. And so even if I end red on the day, I'm okay with that because I wasn't up big on the day to begin with. I'm just trying to use the small cushion I have effectively. If not, I think the cushion's wasted. So I could basically, the point is I could be a little bit more patient here because I already had a cushion on the day, and you know, I'm green. And so even if I lose, I'm still down less than I would be if it was just all net losses. And if we do come all the way back down, then I'll have a really nice trade. So let's see what we get. I don't know. The problem is Nvidia, though. Nvidia is still trying to rip. I don't like this. to cut it. All right, so we took our risk. It didn't end up working. The NASDAQ, you know, Nvidia is still churning up, I think is the real problem. So Nvidia is still pushing. Now, we'll give it time, but yeah. See, maybe it would have worked. I also have Quant Tower where I made some money yesterday. You know, we got a bunch of these. Like, I got a bunch of 250 combines. So what you might see me do here, chat, is switch and take some risks on these. Yeah, so yesterday we made about $600 on this one. Let me check to see if we can find one. That one's lost. All right, so here's a 250 challenge. There we go. I was right here too, which kind of hurts, but it's all good. Sometimes that's how it goes. All right, so you see this 250. I was very correct about my direction too. Kind of hurts, but it's all good. You know, when you trade enough, like, it starts to kind of condition it where it doesn't hurt as bad. All right, so again, we are long here, full size on a 250K challenge. We're gonna see if we can get funded real quick. We have to make, on this 250 challenge on Apex, we've got to make, yeah, on this 250K challenge, we have to make 15K without losing roughly 70K. So we got a lot of room, and we're at the bottom range. I think we got time to bounce. If Nvidia starts to rise, we're good. And if not, if we lose this, we're out 40 bucks. It's not the end of the world, you know. So that's kind of the goal here. Yeah, the Dow has been moving a little bit different lately. The Dow is kind of like its own animal, though. Same thing with the Russell. You know, the Russell, the Dow are all kind of different. But long term, they follow each other. So long term, they all trend well. Dow's only 30 stocks, too. So it's going to have different price action sometimes. Well, it depends. Like, I'm just trying to get funded quick, Blaze. So it depends on your strategy. If you want to take a slow and steady approach, typically, I'm very risky when I'm trying to get funded, and then once I'm funded, I scale down and I trade small and slow, which is what I think you're supposed to do. Like, once you're funded, you should not be going crazy trying to get rich. Slow and steady gains, and that's what teaches you how to trade as well. This hurts, though. I was right about the direction on the NASDAQ too. I was shorting it up here. I just got scared out. Alright, so we're gonna buy this now. It's a little risky because if we do have like a really instant break, then you know, it's bad. But we're also kind of got the extension on the downside where we could probably ride this bounce back up. And so this is an actual 50K funded account that we're up over, you know, we're up 1,000 plus on. It's a little unstable down here. I could add to it too. We do have an adding potential here. I'm gonna add to this now. And that way I can take profit quick if we get into the profit. I'm gonna go ahead and take the risk off. I think it's, in hindsight, I think taking too big of size down here. If we start to really flush like we're doing now, I'm gonna rather not have max size. Yeah, so we gotta get out. So yeah, so that would have been a lot worse, a lot worse if we would have stayed max size in there. Max size for me is 2 contracts for a funded account, that is. So when you hear me say max size, 2 contracts is it. With a funded account, this is a 50K funded account. I don't think it makes sense to take crazy big risks. Again, if I'm down $100, again, you got to see my gains. Like, look, here's my gains on this account. Like, if you want to see my full kind of history of profits on this account, just so you guys understand, like, where I'm at risk reward rise. Let's see, this would be this month, I guess. Yeah, so we've only been trading this account this month. This is a relatively new funded account that you see me trading on now. So yeah, here is my full stats of this account that you see me, and I've been trading this account regularly, almost daily. Let me see if I can get it to where I can show you my full. There we go. Okay. So yeah, sir, currently these are my stats on this account. Like after that last trade, we're down a little bit under 1,000. But here's my stats, okay? So we're up about $1,000, $9.99. We have an accuracy rate of about 67% accuracy. So pretty good accuracy regularly. You can see my profit graph here with fees going up. You can see without fees going up, and you see my P&L history here. Losses got a little big sometimes in these situations, but I still think it's a pretty nice system, pretty nice graph. I think we're doing okay, and yeah, we're gonna keep building up profit. Now we got another account here that we're up thousands on that I can show you as well, but we'll show you that later. But yeah, we got another funded account that we're up thousands that we're withdrawing on right now, or getting ready to at least. So yeah, that's basically where I'm at with my. I have more funded accounts like this as well, but I don't want to manage it too much, if that makes sense. All right, so we're bouncing right back up. We're now actually effectively green on that trade that I'm in on that 250K challenge. Well, at least we were. We're basically flat right now. I think my bounce would have worked as well. Yeah, you could use trade evade, I'm pretty sure, on mobile. So yeah, you should be able to trade after the mobile thing. It just depends. And so look, there's a bounce. Yeah, we do have the Cas Shiller house price index today. It's kind of a slow time though, chat. We don't really have a lot going on. Look at Nvidia just ripped up, broke lifetime highs. Or no, I'm sorry, not lifetime highs. Nvidia just ripped up though. So Nvidia up to 121.60s. It's propelling higher and higher here, chat. Yeah, Fubo, dude, I'm paying $113 for Fubo. A lot. Yeah, for what it is, too, it's basically useless. Again, if you want to check out Chart Prime, or if you want to check out Apex with me, again, I've been day trading on Apex. We're down a little bit on the day. We're down 110 bucks. Part of me wants to buy this dip though. Nvidia is rising here. I'll buy the dip. A little risky. We'll take one contract. But this is Apex trading. You can see how similar it is to day trading stocks. It's very similar. And this is what a lot of people don't realize. Like, they might hear the word futures, but they don't realize how similar it is to day trading stocks. And this is actually where most pro day traders day trade, is in the futures market. There's no PDT. You can day trade, short, all that good stuff. Very similar to day trading stocks. You get around the PDT rule, and it's just a useful thing. All right, so there we go, $40. We'll go ahead and cut it there. So we are down 65 bucks. So yeah, we made about 50 bucks there. I'll take it. And again, if you want to check out Apex, again, they give you a demo. They test your skill with a demo account. If you can pass the test with the demo, they fund you the same amount between 25K up to 300K. And for the time being, again, you get the 150K, 250 and $300,000 challenges for the same price as the base one, which is 25K. So it's 40 bucks a month for the 25K, 150, 250 and 300,000 challenges, where if you pass them, you get between 25K, 150K, 250 or 300,000 in funding with a 90% split. And so it's similar to putting the money up yourself in terms of split, right? You're keeping most of your profit, but your risk is noticeably less. And that's the powerful thing about these. You get started, you can learn to day trade with limited risk, and if you lose, it's not the end of the world. Generally, it's out 40 bucks. Again, there are some differences, like hypothetical or simulated performance have limitations versus real accounts. You know, understand I do trade off stream. You're not going to see all my trades. Not an investment professional. I'm not liable if you lose. All that good stuff. But if you want to check it out, use coupon code BT, beginner trading BT, get you the max discount. I think it's like 80 bucks, Alex. So for the time being, it's like 80 bucks. So I think all the activation fees are. The lifetime activation fee is $80, Alex. So for the time being, there's a huge sale on that as well. Alright, so again, we are still moving up here. Part of me wants to short too, but I also think we're kind of flat, so I'll wait. Yeah, you can see on this one, on this challenge, we're up 2,700 or so, so Nvidia is breaking highs. That's helping us. Look at Nvidia up here at almost 122s. The reason I bought it down here is because I think Nvidia has pulled back enough. Typically, the more we move down, the more likely we are to move up, if that makes sense, right? So the more extended we are on the downside, the more likely we are to push higher the next day or the following days. And so that's kind of my logic here with this trade. Although, again, I'm not an investment professional. I have no idea what's going to happen here. So y'all just be safe. We do have the Cas Shiller index coming out in 6 minutes, the house price index. So we'll see what that looks like as well leading into it. So now we're coming all the way back down. So yeah, like I said, I was tempted to short this. I just didn't. Very choppy right now, very choppy. We still got 30 minutes until the open. We got an hour. Remember, CB consumer confidence drops today, chat. That's one of the big things that happens is CB consumer confidence today. That's at 10 a.m. We'll see what that looks like. But that's the biggest report today is CB consumer confidence. None of it is really big. It's kind of slow. I'm also going to miss tomorrow. So I got something I got to do tomorrow, so I'm not going to be able to... We don't have any economic data or anything tomorrow, which is good. And then Thursday, we got jobless claims, GDP, durable goods, and pending home sales. So a lot of stuff Thursday. Friday, same thing. We got PCE, Chicago PMI, Michigan consumer sentiment data, personal income and spending, and the Richmond Fed President Tom Barking speaking early on Friday, which should cause a lot of volatility, all that stuff. So Thursday and Friday, very busy this week. Next week, basically every day is busy. We got PMI Monday, ISM manufacturing, JOLTS Tuesday, we got Powell speaking Tuesday, July 2nd as well at 9:30 in the morning. We got the Fed minutes report later on that day, ADP non-farm employment, jobless claims, S&P services on Wednesday. Markets closed July 4th on Thursday, and then Friday we got non-farm payrolls and unemployment coming out. The market's open July 5th, I'm assuming here, right? Let me make sure. Yeah, CB consumer confidence is important. It's not going to be crazy influential in my opinion, but it's still going to be something. So yeah, everything's open July 5th. Honestly, in my opinion, the market should be open the morning of July 4th, and then it should be closed July 5th when everybody's hungover. You know, I disagree. It should be open. I disagree. It should be open July 5th. I think that's the day everybody's going to be sleeping. So, all right, guys, CB consumer confidence data coming out at 10. In 4 minutes, we got Cas Shiller house price index dropping. All right, here we go. All right, we got Cas Shiller data. Expectations are 7% year over year for the Cas Shiller house price index. So basically, selling prices have increased 7% over the last year for house prices. All right, we're up a good bit here, which is very good on my trade. How much do I have to make here? I gotta make, what, 15K? I'm about a third of the way there. We're gonna go in and take about half of the position off, a little bit less than half. So we got about 17,000 on this position right now. Take a little bit more off there too, lock it in. All right, so here is my profit on this account so far. We are up 1,700 locked in, but up another couple grand. Yeah, we're up about 3 locked in now. About 5 total. All right, guys. Cas Shiller data, minute and a half. For AMC, yeah, consumer CCL earnings drop at 9:15. Yeah, so here's my profit on the Oh, you got 1 minute. See me kind of locking profit in. We're up about 4K. We got 4 contracts left. So yeah, you can see we're up basically 5K. So we're a third of the way there. All right, guys, here we go. 7% house price index is what's expected for the Cas Shiller. Bowman speaking again at 2:15. All right, here we go. 20 seconds, 20 seconds. All right, so here we go. There is the Cas Shiller data. I don't think it's going to move the market at all, but it is out. It came in at 7.2%, so house prices increased about 7.2% year over year. And so, yeah, 7.2% is what the data showed up as for the Cas Shiller. We'll put this up on screen, 7.2%. We also have, again, CB consumer confidence data, which is the biggest report of the day here. That's dropping in about an hour, almost exactly an hour. So all right, so Nvidia is up a ton right now. Cas Shiller is out, so house price is up a little bit more than expected, a little bit. All right, so again, we got the Cas Shiller data, house price index. Again, markets aren't really moving too much. We can look at real estate maybe. Universe solves our energy problem. Solar cars will be used in the future. Maybe, bro. I don't know, dude. I think, again, I talked about the problems with solar earlier. You know, I think the industry is money motivated. And so what I mean by that is like, okay, the industry overall is motivated heavily by money. And so in the end, like, I think that people are going door to door wholesaling solar panels and they're selling them for huge markups versus what they're paying for them. And so that's driving a lot of the growth. But I think a lot of the solar panels that they're selling to people are going to be obsolete within a few years. And so they're basically going to have a freaking $15,000 piece of hardware on their roof where there's a much better version of it out. I think technology growth happens so quickly with stuff like this that that it's a risky thing to strap a bunch of solar panels to your roof right now. As good as the technology might be, I think in a few years we're going to have better tech. And so, yeah, I think you just got to be careful. So we took some profit overall on this trade. So you can see we're currently up on our 250K challenge about $5,300 on our 50K funded account here. We are down 65 bucks. Could be worse. You know, I think it's time to dip a little bit here, so we're gonna short. I might be wrong though. Don't copy me. I'm gonna add to this too. I think it's time to dip. So we're gonna put our money where our mouth is and take a little risk. My max loss here is gonna be about $300, and then we'll cut it and just kind of come back to the account later. I think there's a likelihood of a rejection here, but I could be wrong. You know, but again, my max loss about 300 bucks here on this account. I don't want to risk more than that. Exactly. Yeah, I just think, like, I think the real risk with solar is that technology evolves so quickly that, like, people are financing these solar panels for years and they're being so short-sighted. Like, again, I think it's how susceptible people are to marketing and how gullible people are, for lack of a better word. No offense. And I think if somebody's really susceptible to it, they get sold on it, and it's really hard to get them to accept. They might have gotten, you know, hosed, for lack of a better word. And so I think people get sold on it and they don't think into the future, right? So they think that financing these things for decades is some type of good idea, and in my opinion it's a terrible idea. Like, long-term financing for these things is a horrible idea. I think that again, within 10 years you're gonna have so much better options for solar panels that, like, doing long-term financing on these things just to save a little bit of money, I think is really short-sighted. And I think in the end people kind of break even with it regardless. See, what's unfortunate, Nvidia is falling down. Again, I don't mind losing a couple bucks here, but I'm getting ready to cut it. I'm not going to hold this long term. I like the bet. I think it was a good short here. But yeah, every trade's not going to work out, so we're just going to switch into something else. Yeah, we got to get out. So we're down 315. Again, that's kind of my max loss. I didn't want to lose more than this. So, oh my goodness, we ended up taking more there. So yeah, we'll switch accounts now. We do have a 50K funded account that we can play with now. I do want to, so I got to remember this one. Here. So this is a 50K funded account. We made some money on this account, so we're going to switch since we lost here. That's the good thing about being able to have multiple accounts, I think. Is that you got space. Like, if I lose too much on one account, then I can just switch to a different one, and then it's all good. Plasma fusion, yeah. Alright, so we got this little dip here. Alright guys, so we did end up taking a trade here. It's, again, sometimes what you'll see me do is take trades off stream because it gets too stressful to trade on stream, especially on losing days. I really like the trade. I wanted to stay in it, but I could feel myself getting nervous. So we ended up jumping back in, and it ended up working. We've kind of taken profit on it already. This is the same account that we were trading that we were down about 300 plus earlier. So we did end up making our money back. We're still down about 75, but we made most of our money back. I'll still probably switch out of this account here. So yeah, we're out. We did catch the short though, so we're only down 90 bucks, a much more reasonable loss there, you know. If you count, yeah, I mean, Sam, but that's just not my only perspective on it. So, like, the other reason I'm distrusting of it is because, so, okay, I think people are slapping solar panels on their roof to save money, and I think that, you know, they're not going to work perfectly over the next 10 to 15 years. So you're going to need repairmen. You're going to have to, like, repair them, fix them up, do all this different stuff. And I just think that the net gain that you're going to get from solar is going to be very light. Like, very light versus just waiting. I think again, I think a lot of it is basically you're saving peanuts with so much hassle. It's not worth it. With solar right now. I think maybe in 10 years when solar gets better and better, sure. But right now it's not justifiable for me. But again, like I said, I could certainly be wrong. I could definitely be wrong. I'm not sure. Definitely could be wrong. Not everybody needs a new TV after 5 years. Yeah, but people tend to buy them anyway. Again, yeah, again, for me, I don't know. I'm not into it. But again, I could be wrong. You know, maybe you do save enough. I think, again, like most things, it's somewhere in the middle. It depends on what you do. If you're in some type of high energy needing situation, sure, you know, save some money, strap some solar panels to your roof. If not, I think it's just going to add so much stress and work for a very small amount of savings. It's not worth it. All right, look at Nvidia bounce. So Nvidia's back up and running here, bouncing. Still in that upward trend. You can kind of see the trend. Beer and banana pills. Yeah, we're still kind of shorting on this account. I guess I should show you this one. Kind of going back and forth though. I gotta be prepared to cut it. Nvidia seems like it's getting another resurgence. I think my mistake here is I'm trading against the trend a little bit more today. So we'll get out and then. Yeah, what you save on solar is what's going to cost you in the panels. Yeah, hey, that's my point, is like the net gain that you're going to get when you take into account interest, financing, equipment costs, like installation, you know, it's going to be very light. And I think you're going to save more just waiting and getting them installed in 5 or 10 years when they're more efficient over the life of your home versus now, where it's still a very, like, there's a premium that you pay. It's kind of like IV, right? So IV, implied volatility, what that means is that things cost more when volatility is high. You know, the solar industry right now is very young, very new. And so, you know, the volatility is high right now because it's still young and it's still new. I think a better option is just to wait. But again, I might be wrong. I certainly could be. All right, so look at this huge rip in the NASDAQ here. I'm trying to see what other stocks are dragging this up some. Apple up to 210, so Apple's breaking highs. Microsoft is up there. So it's Apple. What other stocks are breaking highs? It's mostly Apple I see right now. Is it Tesla? Yeah, Tesla and Apple are ones pushing the market up right now. Tesla back up to 185. Yeah, so there are subsidies. That's something that you probably want to think about too. Experts in the field have stated that the tech is nearly as good now as we can get it. I think that's a silly statement, brother. All good. It's all love here, dude. Like, it really is. It's all love. Like, all good. I understand, right? I really do, right? Like, I truly understand. That is never the case. Honestly, that is never the case. Like, saying the tech is at its peak right now versus towards, like, what it could ever get to, I think is a very silly statement. I think, obviously, technological advancements are going to happen over the next 5 to 10 years, especially in solar if they're doing research on it. You know, it's kind of like saying the internet was the best it was ever going to be in 1997, 1998 when DSL or in 2001 when DSL came out. The internet's the best it could ever be. I don't think it can get much better. Fast forward 15 years, of course it can get better. Of course it can get better. And I think it's the very same. It's the similar. And again, I guess I could be wrong. You know, maybe there's some parts of solar. Again, you could be right. I try to look at both sides. Maybe there's some parts of solar that mean that it can't grow in that way. But I don't know, bro. I think that's probably just a pitch. That's probably what salesmen are telling people to talk people into buying it now. You know. Yeah. Again, I think you got to look at it in that way. Like, this is mostly salesmen, and this is my skepticism with it, is that salesmen are the one pushing it. And so, of course, they're going to say, hey, it's the best it could ever be right now. You better buy it right now. It's the greatest it could ever be. But I think anybody that understands technology growth understands that's not true. Yeah, it's all good, Sam. You know. Again, for me, I guess the best way to put it is I'm the type of person I'd rather just wait and see. But again, I could certainly be wrong. Maybe I'll eat my words. It's certainly possible. I can look at it and understand there's a lot of areas of it that I just don't know. And so you might be right. Anyways, big pullback here after a big run for the Nasdaq. I don't know whether I want to buy it or short it. I think we're still in this range. So I think shorting it makes more sense, I think, right here. We'll try short. Go. I'm gonna add some more to this. Go break down a little bit. See, the problem is if Nvidia bounces, I don't want to get stuck in it. All right. I guess the better question is, do you think in the near future language models like GPT or Gemini will be used commonly to make trades in the market? I don't know. I think that I think yes, but I think a more likely is that they're going to be used to create algorithms. They're going to be used to create software that takes trades, not take the trades themselves, if that makes sense, right? So I think it's much more plausible that they're used to create software versus them specifically taking the trades themselves. I think there's a lot of liability in terms of them taking the trades itself for OpenAI and others like Google and everybody else, that I think that they're going to avoid that, and that they're like, I think you can do the same thing, but it's going to be independent to the actual AI models themselves. All right, so we're flat here. Bouncing up. A little bit of a longer term trade here. I want to give it time to come back down. I think Nvidia's at the top of the range. I think this is kind of at the top of the range when you zoom out here. You know, you can see we're kind of at the top of the range. I think we could get a pullback, but again, we're up hundreds in this account already. So if we lose, it's all good. I could take the risk. Take that off. I'm gonna go ahead and short this. We have the cushion that we can swing into now. You can kind of see my graph here in this account. Took half off there. We're up over 7. Just gotta go ahead and get out flat. Yeah, we're up 700 plus. All right. All right, guys, we got 9 minutes. Hey, thank you, Michael. I appreciate it. Yeah, I mean, again, and this amount of viewers is pretty low. Everybody's traveling right now on summer vacation, and we're at the quiet few week period. So every quarter, you get a couple weeks of quiet periods where we don't have a lot of stuff going on. My channel really is mostly an economics release channel. So like you'll see me day trade, and I invest and swing trade and stuff in the stock market. But where we really get a lot of viewership is from economic releases, you know? So like this week's slow, next week is incredibly busy. Thursday and Friday, we got a lot of stuff happening. And so, yeah, a lot of stuff happening Thursday and Friday. GDP data, where a lot of people have been saying that we're in a recession and all this stuff. GDP data drops Thursday and Friday, right? So that is a huge report, a huge release. PCE data on Friday is going to be even more important, like an even bigger release is PCE data Thursday and Friday. So that is something you definitely want to pay attention to. And again, we get thousands of people that tune in for that. So we'll have 1,000 plus here when we cover that, because it's just something that like we cover quickly. You know, we get a lot of interest in that from everybody. And so, yeah, stick around. Be here Thursday or Friday, I guess is the point, because we'll have thousands here and it'll be fun. GDP data is super interesting right now, with a lot of people wanting to say we're in a recession or we're leading towards it. A lot of people pushing for rate cuts. And so with that, you know, people speculating that, you know, it'll be interesting to see what's expected for Thursday as well. So GDP data comes out. We are expected at 1.3%. Last time we showed 1.3% also here. So it'll be fun. We'll see. All right, Nvidia starting to rip up as well here, chat. Testing highs again. All right, we got six minutes left till market opens. Hey, what's up, Greg? Hey, thanks, man. Solar Edge. Yeah, a lot of people talking about Solar today because of the Solar Edge dump. But again, I think if you look at Solar Edge's chart, people are acting like it's Apple, and it's not. Like if you look at Solar Edge here, SEDG, this is a very bad long-term chart. Sideways consolidation, huge dump over the last year, just very big weakness. Yeah, I know we have tomorrow. I'm not going to be here tomorrow, unfortunately. I have stuff we got to do tomorrow. But I'll be back Thursday for sure. All right, so we are catching this short position breakdown here. You can see we're in one contract left, riding this down. I'm not sure what's dragging it down, but we are now up $200 on our other account today. So up everywhere, basically. Weird. Is this Nvidia related? What about Carnival Cruise? So Nvidia's down a little bit. Carnival Cruise ripping up right now on good earnings. Yeah, Carnival Cruise posted a 2-cent loss per share. They expected, or no, they posted 11-cent profit. They expected a 2-cent loss and higher revenue than expected. EBITDA was 1.2 billion versus 1.07 billion expected. So better than expected everywhere for Carnival Cruise line. We got the opening bell in about 4 minutes, chat. But yeah, look at Carnival rip. And again, if you want to day trade with me, we are on an Apex funded account program in futures. They give you a demo. They test your skill with the demo. If you can pass the test, they fund you the same amount. Base one is $25K. It's only $40. You can also get the 150, 250, and 300,000 challenges for $40. If you pass it, you get hundreds of thousands in funding, and some of them with a 90% split. If you fail, you're out $40. Great way to learn day trading. If you lose, if you think about it, like real-time data comes with these. If you try to pay for that yourself outside of these, it's going to cost about the same amount. So the value is obviously there. It teaches you how to trade under pressure. If you lose, it's not the end of the world, but you're still risking something. And if you pass it, you get a 90% split once you're funded. It's the best of both worlds. They've paid out over $200 million since 2022 as well. So it's just a great option if you want to learn. Futures market's very similar to stocks. You can day trade the S&P, the NASDAQ, gold, commodities. Patterns are very similar to blue chip stock day trading patterns, but there's no PDT rule. Again, if you want to check it out, use coupon code BT, beginner trading. They'll get you the max discount. Are you shorting? I was. So I was shorting the NASDAQ 100, basically the QQQ price action in the futures. And again, here's the link if you want to check it out. Understand they're a sponsor of mine. They pay me money. I'm biased because they pay me money. And so, yeah, I always tell people the same thing. I'm biased. They pay me money, so. All right, guys. Here we go. 2 minutes until the open. Big volatility showing up. I'm trying to see why. Yeah, definitely top three. Look at the NASDAQ flush here, guys. Like, look at right here. Look at the NASDAQ dump. Gamestop rip it up as well. Must have been 24s. All right, here we go. 1 minute, chat. Yeah, Nvidia falling. All right, so there's the NASDAQ bounce. You got 30 seconds until the open, chat. 30 seconds. All right, here we go. 10 seconds. Remember, we got CB Consumer Confidence in about 30 seconds, or 30 minutes. There is the bell. NASDAQ Nasdaq still falling down some. Look at this big dump. Wow. Part of me wants to buy this up, but yeah, I should have bought it up. Look at that retracement on the Nasdaq. Ah, wanted to. It's all good. Look at that big retracement. We wanted to take advantage of it again. That's all good. We're up everywhere. Here's Gamestop trying to hold green. Nvidia bouncing all the way back. Q very flat, but this is a 30-minute chart, so let me put a 1-minute chart up. Yeah, so Q very sideways. Right at that bottom range. Alright, so we just scalped a little bit more. We're up 735 in this account. Why has everything been going down lately? Because things are extended on the upside, man. We've just had a lot of yeah, things are just extended. All right, cracking lows here. It looks like here we're right at the bottom of the range. It's not a shock to see things pulling back. You know, again, doom and gloom crowd are gonna act like every dip is the end of the world, but most of the time, pullbacks are healthy. They're necessary. We're not going to go straight up in anything. It's not a reasonable expectation to expect that, to just expect that we're just going to go up all the time and never stop. Pullbacks are actually healthy. I would much rather something go like this than something goes like this, because this typically follows or precedes this, you know, so like I don't want to get stuck in something like that. I would rather us get like reasonable, healthy pullbacks than attack crazy amounts of gains and never any pullbacks. Dixie's going up because the market's going down. It typically does the inverse to the market. So Dixie is up today at 105s. GameStop still holding. Nvidia looking weak still though. See, I was just about to short this based off of Nvidia, but I missed it. Alright, we'll short this now. A little bit late of an entry though. Alright, we're gonna have to cut it. Yeah, we're out. Too much risk there. We are getting back to the top of the range. I don't know what we should do here, but we are getting back. Let me see if we can exit out. I think I got too many windows up. My computer's starting to sound like a rocket ship again. There we go. That's better. All right, so we just made a very nice gain here short. We're going to go ahead and cut it there. So we are up 780 today on this account, 780. So we shorted the top of the range. I thought we would give it back. We just kind of range trading here. So yeah, 780 in profit on this account on the day. Yeah, we're up 662 today, 662. Nvidia looks like it's getting strength as well. So gonna keep these two accounts separate. There we go. Just made most of this back here. Now we're red. See, we're just choppiness, unfortunately. Maybe waiting for CB consumer confidence data. All right, so we got out green somehow right there. Somehow we're still up on the day, I believe, in this account. Let me see. Yeah, so we're slightly green on this account on the day. Somehow we got out green. All right, so we are up over $100 now on this account as well. Market's still flushing down some here. So we're green on this account. I'm going to switch to my 250K challenge. I'd like to get funded in a $250,000 account. I'm going to go short. And so, yep, we're going to add to our position. All right, we're back. Go. Took a piece off. Took another piece off. Took another piece off. Ended up getting out, so we're down a little bit now, but we're still up about $6 grand in this account. I'll add right back to it some size now that we're in profit, but it's a, there we go. There we go. We retraced. All right, so we are now out. We're up about $7 grand. We're basically halfway there. So we are halfway here on this account. About halfway there. We got 20 minutes before CB consumer confidence is out. Huge drops. Look at this red action here, guys. Wow. All right, we're going to go the other way now. Deep red action. We're going to try to play the volatility on the downside and ride a bounce. See if we get a little bounce back. And if we're wrong, we're wrong. There we go. We got 7 contracts left. We're up about 9K. We caught the bounce. We probably should have stayed in the full size position here, but it's all good. Try to get our full size back. Let's see if we, yeah. All right, we're in full size here. Again, if we lose, it's not the end of the world. Like, we're trying to get funded on a 250K challenge. So, there we go. We're at about 11K. Very close, chat, very close. 10,000, we're at about 12 now. About 13. All right, so we're out. So yeah, we are up about 12 actually. So we need 3 grand more. No, we're up 13. I'm sorry. We need 2 grand more. So here is the stats. Big bounce back on the Q. I need $2 more $1,000, so I'm gonna use 10 contracts max here. We're gonna start to short this. 6 contracts. Might have to take a little bit more. We'll take 15 max. Sheesh. Punished. Not bad, but it's so tempting to add to this and see if we get a retracement though. So I'm gonna go ahead and try. It's a risky thing. If I lose, it's out 40 bucks. That's the mindset I have to have here. Yeah, Nvidia all the way back up. That's what's driving this. We'll let it hit this resistance and we'll have to cut it if it breaks. If it goes in my favor, we're there. We're funded. But if it doesn't, you know, we're back to where we got to make another freaking... We're about halfway there again. I'm trying to let this resistance level play out, but I'm getting very close to cutting it. Market just rebounded fast here. Yeah, I got to cut it, unfortunately. Oh, dude. So that disqualified me. I was so close, dude. I was so close, man. Ah, it hurts. It hurts, guys. I'm going to go back. So, again, this is me trading an actual challenge account. This is my funded account. We're green, like very green on our funded accounts today. Unfortunately, we were very close. Here's one of my funded accounts today. We are up in this one. So, in actual gains, we're up 130 in this one. And then on the other one, we are up 700 or so. What are we up? Yeah, we're up 662 net in the other one. So we're up about $800 in our actual accounts, but it hurts, guys. It hurts. I bet it all on one big rebound and we didn't hit it. Yeah, consumer confidence data dropping in 15 minutes. Yeah, there's the big dip. So I just got my entries a little off. So this is my actual funded account. We'll see how this goes. Again, I'm thinking we're going to get choppiness. I don't know how big this report's going to be is the only problem. Like, I don't know how big CB consumer confidence is going to be. It might be big. It might not. Yeah, it's all good, Chuck. Again, if I was red in my funded accounts, I'd probably be a little bit more upset. But since I'm very green everywhere, and that was just a challenge account, it's not. I'm all good, bro. It is what it is. It happens. I'm gonna short this though in an actual funded account. Yeah, I'm just, again, we're running into chop. I'm still green on this one, but this one's definitely more a little, I'm locking in the $700 or $660 in gains in the other account. So net, we're up about 700, but we're just kind of flat, choppy right now. It's kind of boring. We got the CB consumer confidence data dropping in 14 minutes, so maybe that'll mean something, but. Yeah. I should have gone with my initial plan of keeping the 10 contract max size there, but again, it's all good. I think we're seeing a summer slowdown and everything right now. We're just seeing, it's just kind of boring. And again, we're going to be gone tomorrow, so I'm not going to be here tomorrow. I'll be here Thursday and Friday, though. I got a bunch of accounts too, so like, I mean, as a sponsor, or as them as a sponsor of mine, it's kind of like I got a bunch. We got 2 PAs here. Yeah, I mean, if you guys want to see them, I mean, look, so here's my 2 PA accounts. So if I put this up on screen, so like here's my first one. You can see this one, we're up about a little bit under 2 grand. This is the one that I'm up 780 or so in gross, about 680 in net. But yeah, you can see I'm up about almost 2,000 in this account. The only other one I have here is this one, which is where I'm up about 3 grand in my PA account on Apex. So these are my actual funded accounts. This one I'm up about 3. I started at 50, so we're up about 3, a little bit under 3. This one we are up about 1,800 bucks. This is the one we made, like this is the one we're up about 1,000. We made about, you know, 1,700 today. Or we brought it up to 16 or 700. So we're doing good in these two. And then on this one, it's a little bit more of like, this one is recently funded. The one that you see me on right now is recently funded. Nvidia break it up to 122s. Yeah, now we're coming all the way back down. We got about 11 minutes though, chat, so we'll see if we get anything good. Why would anyone think solar would not be around in 10 years? I think they're going to be around in 10 years. I just think we're going to get technological gains in 10 years. That the solar that we have now is going to be peanuts compared to what people are going to be having in 10 years. And so I think we're early, I guess is the point. We're on the forefront of people starting to use it to get cheaper bills and stuff on their homes. And so I guess the point is like, I think if you're too early, you're going to get the worst product. And I think right now with some of the solar getting strapped to people's roofs and this big hardware, I think it's just, it's simply too early for me. But again, I might be wrong.
All right, guys, 10 minutes. We got CB consumer confidence in 10 minutes. All right, guys. So yeah, we're kind of boring right now. Nvidia's breaking highs though ahead of this, so that's dragging everything back up with us. Again, though, the Nasdaq itself has been like the range has been getting consistently bigger. So like here's the range, larger, 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 right? But it's still a very rectangular looking range. It's sideways. It's kind of boring. Nvidia's been moving up. Gamestop down. Apple, last time I looked at it, it was green. But yeah, Apple was retraced. Tesla was running earlier in the week. Tesla is now at 183. So yeah, it's slower. Okay. All right. If Nvidia has to break through 122, or we'll keep chopping. Yeah, I mean, I think it's right around 122. I think it's just bouncing back from yesterday, you know. And a lot of people tried to act like yesterday was just the end of the world, and I don't think it's anything close to that. I think a pullback is healthy. It needs to pull back some. Tesla bouncing back though. Tesla at 184s. All right, guys, we got 5 minutes left. Was that what I said on my poll? Yeah. Oh, I guess y'all are referencing my poll. I guess I said it. Yeah, I mean, what I meant, I think solar will be around. I guess the easier way to put it is, do you think solar is going to evolve over the next 10 years? And so that's probably a better poll here, but it's all good. We'll end that poll. Most people are saying yes, which I would agree to. All right, Nvidia 122. Yeah, we got some stuff going on my end. So I'm going to close the stream down once we hit CB consumer confidence data. Also, y'all check out Chart Prime. Chart Prime is a trading view service you can use in stocks, crypto, Forex, futures. It's a really cool way to check charts. We got 5 minutes until CB consumer confidence data. Again, it's kind of slow week, man. We don't have much going on. But if you want to check out Chart Prime before we get out of here, I like using the market dynamics and the market oracle.
I think this is the coolest way to use it. Let me see if I can put it on. And again, this is a custom trading view indicator service. It's $40 a month, so it's very cheap, very cheap. You can see, look at this nice little wedge breakout. And again, look at how powerful they are. Like, looking at their last, look at this one, big breakdown, buy signal here. You got a nice bounce, sell signal there. You got a nice drop, strong buy signal there. You got a nice bounce, sell signal. We'll see if this one works. But again, 1, 2, 3, 4. The last 5 look like they're working, at least 4 for 4. And so again, I'm not guaranteeing you're going to make money every time, but you can use this on any time frame, a 1 minute, an hourly, a daily time frame, and it's not always going to work. You got to test it yourself. But again, it's powerful. I was always kind of skeptical of these companies before I started trying this out myself and seeing these. And again, if you just look at this, for instance, here, look, strong sell signal drop, strong buy signal bounce, sell signal drop, strong buy signal bounce, sell signal drop. This one looks like you got to follow through as well. So the last 5, if you wait for it to happen during volatile trading hours, it can be powerful. All of these basically to me look like it worked on a 1 minute chart. And so again, if you want to check it out, it's a company called Chart Prime. I can't guarantee you're going to make money. They're a sponsor, so they pay me money, and I'm biased because of that, of course. But if you want to check them out, here's the link. It's only $40 a month, roughly, if you use my link. And again, we'll see what the CB Consumer Confidence data shows. All right, guys, 3 minutes. NASDAQ popping up. All right, guys, we got 2 minutes left. 2 minutes. Hello? Sorry, that was my doctor. They were talking about my alkaline phosphatate levels. My alkaline phosphatate levels were high, but they said everything else was basically normal. So that's good. So I'm healthy, I guess. All right, guys. Again, we're going to get CB Consumer Confidence data out, and then we're just going to probably close it down. Kind of a slow time. It's the slow part of the month. Slow part of the quarter, I guess I should say. But yeah, CB Consumer Confidence expected at 100. We got 30 seconds left until it drops. It's expected at 100. Again, we'll see what it looks like. Yeah, top 3 in the world. All right, guys, here we go. And here's the report. Let's watch the market. All right, CB Consumer Confidence data is out. Market is going up on this report. It still hasn't dropped yet, actually. I'm waiting for it. Richmond Fed Manufacturing Index is out. Market's liking this data for some reason, though. I'm not sure why. Q was up from it. There's CB Consumer Confidence, slightly higher than expected consumer confidence data. So CB Consumer Confidence came in at 100.4. We showed up at 100 here. So again, it could be worse, guys. It could be worse. I'll put this data up on screen. I'm going to go ahead and bow out of here. Again, I got some stuff I got to do today, so I'm going to get out of here. Y'all be safe. Y'all be good. I love you all. Y'all have a great day, team. And again, if you haven't already, check out Apex. Apex is a funded account program. They'll give you a demo, test your skill with it. If you pass the test, they fund you between $25K up to $300K with a 90% split if you fund it. If you fail, base one's $40, the $150K one's $40, the $250, $300K challenges are $40. And so if you pass them, you get tons of funding. If you fail, you're out $40 if you use my link and coupon code BT for beginner trading. So here's the link. I'll see you guys later. Y'all be good. Hey, y'all have a safe and happy weekend. I'm going to get out of here. Market's liking this data, though. Look at the market rip. Nvidia breaking highs. The Q's pushing up. And so the market's liking this data. But yeah, I'm going to get out of here. Love you all. Y'all be good.